Welcome to this stock analysis blitz for Coinbase. Please remember that I do these videos just for fun as a hobby and always speak to a qualified financial professional before making any investment decision. So Coinbase is America's biggest crypto exchange. If you go on their website, you can invest in all these different kinds of cryptocurrencies. We see that they IPO'd back in 2020. And this, of course, was when we was at the height of the FANG stock bubble. So I think that the owners of the company did very well to cash in just at the perfect moment. And of course, everything had ridiculous valuations back then. And the stock price has since dropped 80%. I think that a lot of retail investors kind of blindly invest in Coinbase regardless, thinking it's a good proxy to bet on the price of Bitcoin. But actually, I'd say the share price doesn't really exactly correlate with the price of Bitcoin. And my first impression is that it was ridiculously overvalued at IPO. And then we've had this 80% drop to a more realistic value. 74% of their revenue is from transaction revenue. And this is really the bread and butter of how cryptocurrency exchanges make money, by people buying and selling assets on their platform. Coinbase really made a name for itself back in 2017. This was when the price of Bitcoin went up 30x. And actually, a lot of people who are into Bitcoin now, they got their very first Bitcoin using the Coinbase platform back here. So Bitcoin was the first asset that they used to sell on Coinbase. But the thing with Bitcoin is that most people just buy it as a store of value. And so there's not much transaction volume that goes on with Bitcoin compared with these other coins. With all these other coins, people are mainly just wildly speculating on them going up in value. And so you get much better transaction volumes. And Coinbase have been quite shameless in listing just as many coins as they can, because then they advantage from the higher transaction volume. We see the transaction volume split by asset. We see that Bitcoin is only 29% of the transactions on Coinbase, with Ethereum 22%, and then other coins, which is all this other stuff, that's actually half of their transaction revenue. Bitcoin is a completely decentralized asset. It's proof of work, but it's not controlled by any single small group of people. And so, because of that, the regulatory authorities regard it as a commodity. It's regulated by the CFTC. Now, after Bitcoin came along, lots of people copied the blockchain part of Bitcoin and then they added little tweaks. But unlike Bitcoin, most of these other tokens, the issuance of these tokens were then kept by the people who launched the products. And so you have centralized and mostly proof of stake systems. And so, because they resemble in a lot of ways a crowdfunding exercise where the developers of these projects have basically raised loads of money to issue these tokens for projects that haven't even started, and then the consumers are speculating that they're going to make loads of money from it. But of course, why would these guys work hard? Because they've already pocketed loads of money from the ICO launch. So because all of these assets behave like this, the SEC, most of these are probably going to be classified as securities by the SEC. And so this is creating a massive problem for Coinbase. And only last week, the SEC issued a 8K form, and the SEC gave Coinbase a Wells notice, which is basically a notice that they're going to start taking enforcement actions on them, which could be, taking them to court, fining them, and perhaps doing cease and desist orders on them. It really could be that the game is up for Coinbase, who've been issuing all these things here, which could quite potentially be unregistered securities. That's actually why I decided to take a look at Coinbase, because I was kind of interested in how would they be able to survive if the worst case scenario happened and they get forced to remove all their shitcoins off their platform if the SEC decides that they're unregistered securities. Now, in July of last year, Gary Gensler, the chair of the SEC, actually made it quite clear in this video on CNBC television that a lot of these crypto tokens were going to have to be regulated. So here's that video.
Look, this is a highly speculative asset class. We've known this for a long time. The ups and downs of this speculative asset class, Bitcoin, and hundreds of other tokens. And many of these tokens offer the investing public, or the investing public is hoping, I should say, hoping for a return. Just like when they invest in other financial assets we call securities. And many of these financial assets, crypto financial assets, have the key attributes of a security. So some of them, they're under the Securities and Exchange Commission. Some, like Bitcoin, and that's the only one, Jim, I'm going to say, because I'm not going to talk about any one of these tokens, but
sure.
My predecessors and others have said they're a commodity. Working together, there's two great market regulators in this country. I had the honor to chair the CFTC, a terrific agency. I have the honor now to chair the Securities and Exchange Commission. A little bit different remits, a little bit different approaches, but working together with the banking regulators as well. There's work to be done there around what's called stable coins. There's a lot of work to be done to really protect the investing public. And many of these tokens right now are trying to operate, they're potentially non-compliant, and I'll leave it at that, Jim. What we have in the US is we have this concept that you have market regulators like the CFTC and SEC to help protect the public against fraud and manipulation in the markets. And when there's a group of entrepreneurs that are selling something to the public, who are saying to the public, come here, come hither, we've got this great idea, that when you do that, you've got to have basic disclosures, full and fair disclosures. That's what the SEC does. That's what we do really well. It's less so, in the oil markets or the wheat markets that the CFTC has. And so that's what we have. And right now you have hundreds, if not thousands, of these crypto tokens that have the basic attributes of raising money from the public and having a group of entrepreneurs that you might have on your show saying, come hither. We've got a good idea for you. And that's okay in America if you comply with the laws. And we've got, unfortunately, a lot of projects that are non-compliant.
So if this Wells notice from the SEC really just mean that the hammer's going to come down on Coinbase in the next 30 days, let's have a look at them as a business in a bit more detail and try and work out what that would mean for Coinbase. So Bitcoin had its last big pump during the course of 2021. And then in 2022, it was in a bear market. And so we see that when we're in those boom times, there were obviously a lot more people on Coinbase. And so this meant that Coinbase were able to generate a lot more money in 2021 with a decline in 2022. So when we look at their income, we saw that it jumped up to actually a very impressive 7 billion in 2021, mainly from trading revenues. And then it dropped back down to only 3 billion in 2022. And then this overall led them to making about 4 billion in 2021, but then a loss of roughly 3 billion in 2022. Now, what I notice here is actually if they'd stuck to just the trading, they quite possibly could have still turned a profit in 2022. But you can see here the technology and development. They've been spending a lot of money with over 2.3 billion on this new research and development. And their general and admin costs have gone up as well significantly to 1.6 billion. And when I dug into that, a third of that was for better compliance and customer support costs. but 149 million of that was stock-based compensation for the staff, and 80 million was due to a 92% increase in the headcount. So I think they're definitely having to spend more money to make them a bit more robust because they anticipate them having to do a bit more work on the regulatory side. But I do wonder a bit about their research and development costs. Based on my research, they've been trying to kind of reinvent themselves a bit with this Web3 stuff and then all these kind of development tools. And I think one thing they've been trying to do, which I think is this Coinbase cloud thing, um, but they're definitely trying to build blockchain tools where it's a move away from this issuance of tokens, which could be securities, which mean that not really able to do that anymore. Instead, the way forward might be people might have actual legitimate users for blockchains, and Coinbase may be investing in products that they can sell where they use blockchain technology to provide private companies with solutions. I mean, that's how I kind of interpret it. You don't have to raise a token, but then there's all kinds of other things, NFTs and fintech. But they're obviously trying to invest. They're obviously trying to do a bit of reinvention as a kind of blockchain company. But of course, it's highly uncertain whether you'll get any kind of return from that. The majority of their income as of now is from transaction revenue. When I looked into the income here, I found that 301 million of that was down to a deal they have with USD coin. So that's obviously not really income from their new technology. It's more just a deal they have with a stable coin, and I'm not sure how robust that income stream is. So as far as I'm concerned, the majority of their income is due to revenues from transaction volume, and I do worry that transaction volume is going to decrease significantly now that the SEC are going to be clamping down on unregistered securities. So, from looking at their income and loss statement, my main impression is that actually, if they'd stuck to just the trading of assets on their platform as a crypto exchange, they could actually have still been profitable in 2022. So, looking at their income and loss statement, they seem to be spending a lot of money on headcount and general and admin and this research and development. And most of this research and development are these new projects that they're trying to introduce where they can sell all kinds of different kind of blockchain services, uh, but we don't know how successful that's going to be. Personally, my impression is that Coinbase are almost a bit desperate now. Should they find themselves unable to make loads of money off people trading all these kind of assets that they've been able to get away with up to now, then they're obviously going to lose a lot of money. And I think that's why they've been investing so much in new blockchain based products, but are where you work directly with the people using the services. I think with a lot of this stuff, the idea is that rather than people accessing that technology by buying a token, which obviously could have all kinds of regulatory risks, the future is probably going to be this kind of blockchain technology being sold to private clients and businesses who can then use that blockchain technology for a fee. And so I think Coinbase are trying to make themselves a strong player in that field, and that's why they've been spending 2.3 billion on this research and development in 2022. So they're not reliant on just being able to sell all of these dubious tokens. So yeah, I think if they had have stuck to just being a exchange, they could probably have actually turned a profit in 2022. But it's just because they were investing so heavily in this R&D that I think is why they lost money. But if the SEC does go in and ban them from selling all those tokens, it really doesn't look very good. And you'd need to have an Elon Musk type come in and completely restructure the whole place for them to be able to make money again of their bread and butter of just selling whatever assets they'll be allowed to sell on their platform, presuming that there is going to be a proper SEC clampdown, that is. And then looking at their assets and liabilities, the first thing is in terms of the current assets and liabilities, customer custodial funds and crypto assets. And these are obviously the tokens that people have bought on the website and the cash they have on the website. In this respect, Coinbase are safer than a bank because they actually keep people's funds and the cash deposits as their short-term assets. So unlike banks, which obviously then lend out all that money, and there's all these kinds of risks from mortgage-backed securities and credit default swaps and whatever. With Coinbase, that money that everyone's put on the Coinbase, it seems to stay with them as cash or asset or crypto assets. So in that respect, they're very safe, and these numbers cancel each other out. So that's why, although they complicate matters, I've put them in cyan and they kind of cancel each other out. So I don't really need to consider them in terms of my valuation. And then we see that actually they don't really have that much in terms of short-term monies kind of flowing around. I mean, they do have a billions worth of USD coin, I guess I should say, but really, it's generally minimal compared with the other numbers we're looking at. But they do have 4 billion of cash. And then when we look at liabilities in the short term, again, relatively speaking, there's not much in terms of short-term liabilities. And then when we have long-term liabilities, yes, they do have 3 billion of debt, but it's actually quite good debt because it's 1.4 billion of convertible notes, which they don't have to pay till 2026, and 2 billion of senior notes, which they have to pay in 2028 and 2031. So that's actually fairly good debt to have that they don't have to pay off in ages. And they actually have quite a lot of cash at 4 billion, enough to pay off all that. So this kind of tells me that should the hammer really come down on Coinbase, like I think there is a certain chance that could happen, and they have to basically scrap most of the coins off their platform. If they had a Elon Musk style person come in and have a total clear out of their day-to-day activities, they could possibly actually survive, given that they have 4 billion in cash and plenty of time before they have to pay off these debts. And then if, and these are all ifs and buts, but if then there was another Bitcoin pump or something, which is again a speculation on its own right, you know, judging on what when we look at their 2020 numbers and stuff, yeah, you can see that they could actually turn a little profit. You have to though then weigh against that though. Let's say they are allowed to still trade Bitcoin, but it's treated as a commodity. Well, then that might mean there is extra regulatory expense, even if they're allowed to do Bitcoin, but as a commodity, it's not going to be a immediate collapse and bankruptcy, is what I can say. If the SEC bans them from doing most of their stuff, they do have this 4 billion of cash and a little bit of breathing space to restructure. So here I've got their market cap, and in this lighter green here is their net assets. Darker green is their cash. So you see here how most of their net assets is actually cash. They're not obscenely valued, I'd say. I mean, the price to book is only 3-1, which for a kind of tech stock isn't bad at all. and the price to sales is about 5 to 1. But I think that this relatively low market cap for a FANG stock really does, I think, reflect the risk of regulatory action severely impeding Coinbase's financial performance in the future. I think that risk is probably why we've got the relatively low valuation here. So a quick whiz through Coinbase's last 10K. In their risk section, they're quite clear that their revenue relies a lot on the volume of transactions. They highlight the regulatory landscape as a serious risk. And here they spell out how a lot of their products, particularly things like the staking and stuff, could actually represent serious legal risks to the business, according to actions that could be taken by the FinCEN and FATF regulatory authorities. So if you own Coinbase, I hope you have a good read of their 10K to make sure that you're aware of these risks. So they've highlighted as risks here that they could get orders that don't allow them to sell certain products and could force changes to their business model. And I do think that the biggest risk with them is that they are allowed, that they're only allowed to sell a very restricted number of these assets. And so their business model, which relies on transaction revenue, that would then completely collapse. That's, I think, why they're investing so much in research and development, because they want to replace their existing business model with one where they're basically just making money from selling people blockchain products which aren't related to ICOs and issuing dodgy tokens. So here they spell out how a particular crypto asset status as a security in any relevant jurisdiction is subject to a high degree of uncertainty. The SEC have taken a position that certain crypto assets fall within the definition of a security. And it says here, exactly like in that video I showed you, Mr. Gensler suggested that he believes a vast majority of cryptocurrencies are securities. So it's all there in the 10K. Now here they talk about their deferred tax assets. Actually, their non-current assets here, so these are long-term assets, 1 billion of that I determined was actually deferred tax assets. So that's an interesting portion of their section in their 10K, because they're saying here that it could be that some of those tax assets aren't tax assets after all, if the US government decides to change their tune on how some of those tax assets are treated. So here's the part where I found out that the majority of the increase in their subscription and services revenue was just based to a deal that they'd struck with the USDC stable coin. And so that's why I'll be careful of thinking that they're going to see returns soon on all this money they've been spending on R&D. The majority of their current revenues are still just from people transacting these tokens when they buy and sell them. Yeah, so my feelings on Coinbase is that really it does look really bleak for them. I definitely wouldn't invest them in myself at the moment. Remember that I'm doing these videos just for a bit of fun, and it's not to be taken as investment advice, and always speak to a qualified investment advisor before making any investment decision. But personally, I think it looks really bleak for Coinbase because their whole business model is built around selling lots of tokens. And I think that there's a real high risk that they won't be allowed to keep on doing that in the future if the SEC regulates them. And it was interesting to see how they've been piling loads of money into all this new Web3 and stuff, but I'm not sure how successful that will be. That's the kind of perhaps the speculation you're taking with them. It was interesting though that they do have a lot of cash to the tune of over 4 billion, and their debt they don't actually have to start paying off until 2026. So if they were to be hit with a load of regulation, it could be quite interesting to watch. They could actually potentially be able to survive that through restructuring, but they'd have to would have to scrape down to the bare bones. And I certainly wouldn't want to touch this stock with a barge pole. So that completes my stock analysis Blitz and Coinbase. These Blitz videos is where I just have a quick look at something. So please bear that in mind. And please make sure you don't take this video as financial advice. It's purely for entertainment purposes only. I hope you enjoyed this video and play safe. Please read the disclaimer and remember that prices can go down as well as up.